This is the Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, April 17, 2017. Last week, many commodity prices declined and economic reports were mixed. U.S. steel production rose, and while down from the multi-year high of a month ago, production is still ahead of last year. Oil prices rose $1 to $53 a barrel, double last year's 27 low. Global tensions in the Middle East and North Korea, along with OPEC production cuts, have prices going up. Unless there is a major oil shock, oil prices should stay low due to U.S. oil production increases. The oil rig count rose to 683, near a two-year high. Great for jobs and is helping stabilize steel prices. Note it is still down about 58% from the high of 3 years ago, so there could be more upside. Iron ore fell to $69 a metric ton, a multi-month low, but remains nicely ahead of where it was last year despite weakening. Scrap ferrous prices fell, as we said, and scrap has been coming into yards at a slower rate, as has U.S. production. The question is, as Europe, Asia, and the U.S. continue their slow growth, will we see stable to higher prices in the months to come? Unless there is a major global event, we think prices will be higher. Hot-dip galvanized steel remains steady at $9.10 a metric ton on little news. Stainless 304 scrap remains steady at 37 cents a pound, but with nickel down significantly in recent months, stainless steel prices should follow it down. Copper fell 8 cents to $2.57 a pound, about a 3-month low. The price run-up since November was speculation-driven, not demand-driven, so we are seeing some of these declines now. We are up about 2 cents this morning. The 5-year copper chart shows that while prices are down, they still remain near multi-year highs. And copper inventories have come down a bit, but frankly remain elevated, which is putting downward pressure on prices. Aluminum fell 2 cents to 86 cents, now off its multi-year high with good demand continuing. And the 5-year chart shows we remain near multi-year highs. Aluminum inventories continue to fall, which is helping support these higher prices. U.S. retail sales, a major part of the U.S. economy, fell 0.2%. Importantly, though, this was the first time that there have been 2 consecutive drops in more than 2 years. The Washington stalling of healthcare and tax reform has people nervous. Note the drop in car sales we reported last week was a key part of this decline. Consumer prices increased 2.4% year over year in March, lower than the 2.7% in February. Stabilization is partly due to the prices of materials coming off their multi-year highs, especially with prices of oil somewhat stable after their more than doubling last year. U.S. initial unemployment claims fell to 234,000, the lowest level in 6 weeks. This chart is going back more than 50 years, shows that we are seeing rates not seen since the 1970s. Great news for jobs and helps keep stable prices. The Consumer Confidence Index rose to a 3-month high and is near a 10-year high. The good news is that Democrats, which have been pulling this number down, are feeling better about the economy, while Republicans have been keeping this number high. They actually took it down last month. The positive drivers are the current financial and economic situation. China's economy grew at 6.9% in the March ending quarter, the highest growth in about a year and a half, driven by faster rises in industrial output, retail sales, and fixed asset investments. This will clearly keep upward pressure on commodity prices and is very positive global economic news. As always, feel free to call me or email me with any questions, and we hope all have a safe and profitable week.